Bom dia, mais dia maravilhoso nessa terra. Bom.
Sorry, need to update my videos apparently. All right, guys, I am going to share this chart view with you guys after we are done, but we're going to break it down real quick. I hope you guys all know how to read a candle. I'm just going to get rid of a couple of these things here so we can just look at some charts. All right. Good evening, Options Trade King. Ice King here. Let's get to it. All right. Real quick, guys, just so you know, no matter what, whether you're new or old, I'm going to touch on just a couple basics here, okay? And that is the charts have support and resistance lines, and they happen on whatever time frame you tend to look at. Whether you're in the 1 minute time frame, which we'll just zoom in here real quick, okay? You can see, well, that's going to be a little harder to see because I can't get as big a picture. It does happen on the 1 minute, but let's just go to the 15 minutes so I can get a little bit of a further back picture here, okay? So here, you can see, for example, in several points on here on this chart, there is a solid, you can see it, a solid support line right there, right here. Resistance line hits resistance, 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 and then it becomes it breaks through, gets a big move, comes back and tests back for support. Okay, those are support and resistance lines. What we are going to try and look at today is how to tell if a support or resistance line is going to hold. All right, I'm just going to teach you guys a little way to look at some of these charts, and then also to help you guys understand if you guys should stay in a play or exit a play and make some of your own decisions. Okay, so first we're going to start with, I'm going to go ahead and we're going to start with my daily EMA lines. All right, so what daily EMAs mean? So EMAs are exponential moving averages. Okay, when I say dailies, it means that these are locked onto the daily chart. Okay, this is a custom script that I wrote, and it has 5 EMA lines. You don't have to write this down right now, but I would try and remember it for later. Yellow is 9, red is 20, green is 50, purple is 100, and blue is 200. Okay. The reason I use EMA lines is because stocks just tend to react very well with it. Let's go look at let's just look at BABA real quick. I'm going to put up my comments. If you guys have any questions, please feel free to ask during the video. More than happy to stop and answer certain questions. All right. So we talked about this one a little bit this morning, but here you can see. So you can see very well how it keeps getting pushed down, right? It kept trying to break through, couldn't do it. It finally broke through, gapped up, couldn't hold the support. So whenever you break through a resistance or you fall through a support, you almost always come back and retest it. So when a support fails, okay, here it failed, it almost always comes back and retests. Okay. Almost always. It doesn't always happen, but almost always. Okay. Let's look at let's just look at the SPY. That's a pretty good one. Okay. Here we gap down, we found support, we came up and we're retesting. Okay. Now what happens from here? And don't get too overzealous, guys. I mean, so this does not mean this is a recovery. This is a bounce. This could be a dead cat bounce, whereas this could this could be testing for resistance. If this resistance holds, we could see this now move down lower. So be careful. You got to see if that's real. And look at this huge sell candle at the end of the day today. Okay. Not attractive. All right. So this is the chart view I'm going to give you guys. So there's my EMA lines, okay? These will act as strong support and resistance. So we'll get back to that. My daily breakout study. All right, so what the daily breakout study is, I use this for 2 things. One, without it, it can be kind of tough. You're looking at this chart, right? I mean, how many days am I looking at right here? Now you can go down here and look. I'm looking through the 21st through the 12th. Okay. Well, if I put my daily breakout study on, I can see that if I look at this little part right here, I'm looking at 3 days. 1 day, 2 day, 3 day. I'm a very visual person. I like to, if I'm looking at a weekly option or something that's fine in 2 weeks, I want to see how the price is moving the last week. Well, I don't have to look down here at all. I don't have to look at the dates. I can just tell right here, here's about a week's time, 5 days, right? This is the stock movement in 5 days. Okay, what my daily breakout study is the open and the close divided by 2. So it's the average of the open and the close. That tends to react as a strong support and resistance. Okay, you can see here, if it fails, it usually fails a big move. If it can get, here it failed again, big move, and then it broke, and now it came down here. Well, when it broke through that resistance, now got a big move up. But they tend to make for big moves. Here you can see it struggled for a little bit on this candle, and then it took off again. You'll see it act as a support and resistance. Here you can see every time it touched it, it just kept bouncing off it, kept bouncing, right? Until eventually it gapped up too much, and then it got denied and had to consolidate a little bit. Okay? Just something for you guys to know, but I use it a lot for visual, but it will. If you're watching a stock during the day, and you see it come near this, a lot of times you will see it hesitate or struggle along that line. Like I said, it will act as a support and resistance. Next, let's do. Okay, I don't know if you guys know what Heikin-Ashi candles are. Heikin-Ashi candles will help show you. So, a traditional candle shows you if the price action, if the open was, or if the close was below or above the open of that candle, right? So if it's red, it opened here, it closed here. If you go to Heikin-Ashi candles, it just shows you trends. Okay, so if it was trending up, it just shows you green candles. It's trending down, it shows you red candles. I personally don't like, some people swear that they work very well. I don't think they do, just to be honest. I don't trade off Heikin-Ashi candles. What I do trade off of is a Heikin-Ashi overlay. Okay, so this will show you, this shows you a downtrend, and it acts as a trend line. So it'll act as support and resistance. Let's go to Nvidia. So here you can see it struggled to cross through, broke up, tried to find a support right here, but it couldn't gain traction and it fell below. Then it came back and it retested for resistance, and then it started to push lower. Okay, it tried to get through right here, couldn't get through, push lower. Tried to get through, push lower. Finally, we hit a nice 50-day EMA line, and it broke through for a big move. Once again, didn't hold. So now it's consolidating. We're getting new highs. Like to see this continue green, but not sure it's going to. I think with that split, though, I think this is a good time to possibly take a call on Nvidia, like a longer swing. I haven't taken one yet. I'm going to watch for the next couple of days and see what happens, but those are just my personal thoughts. Think about Tesla when they did their split. They did very well in the next coming months. Almost, it was within a couple months, and they had, I think, a 7-way split or whatever it was, and they were back to their original stock price in no time. A lot of people made a lot of money on that one. All right, linear regression lines. This shows you in a very visual way if the stock is, what the way the stock is going for that time frame, right? So here you can see the trend is downward, right? So it's a bearish trend right now, which goes along with what we're seeing. This shows you 2 channels. If a stock is trading in this upper channel, okay, so this is taking the last average of the last 100 candles. That's what this goes off of. If this stays in this upper channel, the longer it stays in this upper channel, you're going to start to see this rotate upwards. Just to show you what I mean real quick, we'll do a replay right here. We'll go to right here, just so you guys can see. And I'm going to replay this for you, just so you can kind of see how this, move it up a little bit. Just so you can kind of see how that moves as time goes on. See, as long as it stayed in that bottom channel, and it really started to drag it down. Okay. Now it's getting that upper channel. If it can stay in this upper channel, it's going to start rotating it upward. And you can see right there, it was already starting to rotate upward. So this could be starting to turn positive. That's what I'm going to be watching for. Just another simple way to look and see. And like I said, you can go to different hour or different time lengths. Go to an hour. You can see on the hour chart this is pointing down now. But if the 15-minute chart starts to point upward, and then say the 30-minute chart starts to point upward, which they're all pointing down right now because it was in a pull down. But if the 15 starts to rotate upward, then the 30, right? Well, then what's going to happen? 45, the hour, it's going to start following, and it's going to start pulling in back into a positive uptrend and on a bigger scale. Okay. Now, meanwhile, on the 15, if it breaks back down into this lower channel again, we're going to start seeing this go down harder. Okay. RSI bar. Oh, here. Which I'm going to get rid of this linear regression line just to help so you guys can see what I'm looking at. This will show you. So this super trend, this is doing its best guess on a multi-day level, right? So I mean, not very far out, but it's trying to show you breakout levels, similar to like what Mr. Squeeze or what Power Trades gives you guys in the morning, okay, where he gives you levels to look at. So here it shows that this was, when it's red, it's showing it's in a downtrend, right? And the reason it was in a downtrend was it broke out right here, broke above. So it called that a bullish move, okay? As soon as it failed that, it considered that a breakdown. It switched to red, and it's been in a downtrend, okay? Once it broke back above, it went to blue, which shows it's in a positive uptrend. And this will constantly move. Like I said, this is not always 100% accurate. This is doing its best to help you. So like I would actually say that it would be up just a little bit higher would be the support line I'd be looking at, which is the previous lows. If you get a new lower low, that's already a sign of a breakdown. Okay, this thing is not 100% accurate, but it does the best it can, and it works pretty well. You can see it also acts as a strong support also because it is going off of, that's what it's looking for, is daily supports. Okay, so here, fell down, touched it. I told you guys too, you know, we were getting around these daily breakouts. It was getting bunched up, and it finally punched out for a big move. Okay, similar to right here. It was getting kind of pinched, support right here, made for a big move and jumped up. One of the important things to know, guys, in this market, and I've told you guys in the market commentary, that this market is not great for swings. And here's a perfect example of why. Breakouts have been lasting for 1 to 3 days, usually just 1 or 2, okay, and then having hard reversals, which scares people. I mean, so you could have taken this right here, right on this breakout above this level. If you would have rode this and got out same day or the next day, you'd been okay. But if you held any longer, you'd be right back to where you were and probably at a loss. Okay. And then at this point, you would have to decide if you were going to stay in this call or not. Okay. A lot of people have shaky hands when it comes to options. They're very volatile. People might have dumped and got scared. Now, meanwhile, if you had held, but it all depends too. I mean, we do weeklies a lot. This would have destroyed weeklies, and it would have had no time to recover to anything meaningful anyway. All right. That is my support lines here. Like I said, this kind of helps you. All these tools, the more that agree, the more solid it is, right? So, okay, this one right here. I'm just going to double click on this so we can see it. Okay, I just want you guys to know. So I have several indicators here. RSI, ADX, and slow stow. And then I also have a directional momentum indicator. The white is the directional momentum indicator, which by itself means absolutely nothing. Okay. These best work when all three agree. Okay. Slow stow is the red over green or green and red. Crossover would show, so when it's up like this high, that's representing overbought. Okay, but RSI wasn't really that overbought. But that's just something to know. Okay, so directional movement indicator, slow stow, and RSI. I actually don't have the ADX on. It just clogs this up too much, in my opinion. So I don't have the ADX on. All right. Let me show you guys where that's important real quick. So right here on Nvidia, on this big tank down, right? Kept falling. This still had some room to go, but when that didn't hold, we got down to this 50 EMA. You could have asked yourself, is this going to hold? And I'm going to show you there's some other indicators we're going to add in here too in a minute. But would this hold? Well, all of our indicators are in the oversold position. Now, this, like I said, this is not foolproof, but that would indicate to you that this support will hold. All right. That's what I've been looking for. If you were taking a daily, you could have made a decent move on that, right? I mean, it went from 178 up to 190. That's not a bad move if you were on a weekly option. This one down here, this is just a momentum indicator. It actually works best with, I have a zero lag EMA on here. The zero lag EMA, which I'm going to get rid of the Heikin-Ashi candles just for a minute so you guys can see it. Get rid of the daily breakout as well. And we'll just get rid of these for a minute. Okay, so that's this white line. What this says is these are to be used together, okay? But if the price is above, and it says, like I said, not foolproof, you can use it with some other things. So use them all together, right? But here, our directional, it's green, so that's our momentum indicator. If the price is trading above this zero lag EMA, that's a sign of a bullish move. That can work better if you're looking at a further out chart, right? So here, we turned red. Not all of our indicators were up high, but 2 of the 3 were, okay? And the price started trading below that white line. This would have been on July 13th, okay? Red, below, and it just started to tank, okay? So some early indicators. Red, massive pull, then it turned green, got above, climbed up. You guys can kind of go back and play with this. I would encourage you to go look at different charts. That's what I do all the time, guys. I'm constantly looking at charts. I'd encourage the same from you guys. Do you want to see the software as well? Yeah, I would recommend it, yes. So this is TradingView, okay? TradingView has a free version. Unfortunately, the version I'm going to share with you guys at the end of this video, you're going to need to do the paid-for version. The free version only allows you to have 3 indicators, and as you guys can see, I have more than 3 indicators. It's not very expensive. To me personally, I think it's worth every dollar. I don't take any plays without looking at TradingView first. There are so many indicators, and you guys can go play with this too, right? But if you go to the public library, hundreds and hundreds of different indicators. If you kind of want to get an idea about it, you go over to this right here, read more. It will show you a sample. And then the author will give you some instructions and release notes on how to use it. Okay. To add one to your chart. So here, let's look at this one real quick. So here is a super trend indicator. All right. Nothing's foolproof, but that one looks decent. He tells you what it is, how he developed it, what to look for, modifications, even gives you the code to the indicator. So if you want to make changes to it, you could, right? If you want to add that to your chart, you just hit super trend, and there it is. I added it. To get rid of it, so here's a super trend. You can either hide it, or you can X and get out and get rid of it. All right. I also have these RSI bars, which don't really, all these do is they change the color of the bars. You guys don't have to use this. You can see how these candles are filled in, right? So it's still outlined in red, so you can tell this is still a red candle. But if it's yellow, it means that the RSI is below 30. And if it's orange, it means it's below 20, which is just showing you this is getting oversold as far as the RSI is concerned. Like I said, I'm very visual, guys. This is just a quick visual way to tell without looking at this indicator that you're getting to be oversold or overbought. Light blue is above 70 and purple is above 80. Okay. But as you guys can see, even when it was above, I mean, it was above almost this whole climb on Nvidia was from 150 up to 176. It is not a good enough indicator to use on its own. It's just for your reference to be careful and to watch for pullbacks. Okay. Last indicator I want to show you guys tonight. How do I choose your entry? I will get to that in just one second. I just want to show you guys one more of my favorite indicators. Okay, and this is a very simple indicator. I know you guys have probably all heard of it if you've done any kind of chart trading, but it is a MACD. All right. Most people, I don't personally think, trade the MACD correctly. Most people trade crossovers. If you go look on YouTube and how to trade MACD, right, it's going to tell you that this is a sell signal. And when it crosses up, this is a buy signal. Problem with that is here was a sell signal. I mean, you didn't get much of a move out of that, and it instantly went back up. Here's a sell signal. Stock still went up. Okay. The way I trade the MACD is I trade the zero line. So the center line right here is called the zero line. It works really good on the hour chart. It'll work on the 15, the 5-minute chart. I'm just going to show you. So right here, when it crossed the zero line, that shows you a positive uptrend. And look at that. No matter where this is trading, as long as it's above the zero line, it is trending upward. As soon as it crossed down right here, this shows you that it's getting weak. This is a perfect indicator right here. And this, in my opinion, you can use these together, but these have to agree. And if they don't agree, I would always go off the MACD. So here it looks like, to me, I would have guessed, if I was just looking at this, I would have almost guessed that this 20 EMA line was going to hold. But the MACD showed you that it was not going to hold. It was going below the zero line, and it was going to fall. Okay, this is still trading below the zero line on the hour chart. If you want to go into the 15-minute chart to get a little bit better view, you can see that it's trying to get back above the zero line. The problem is if you get on the 15-minute chart, 5-minute chart, you start getting some mixed signals. But you can still see it tried to come up, but right here, as soon as it couldn't hold that zero line, again, so here it failed. Tried to get back up, did not get back up. It failed. I also have this line. Okay, this is called, that red line is a zero lag MACD. So the zero line MACD, it just reacts faster than the MACD does. So let's look real quick. So here the MACD went down below, right? So it shows you that it was going to have a pullback for a minute. Okay, the zero lag MACD though jumped up way, I mean, a good few hours before the actual MACD up crossed. When it's strong like that, and this is still heading upward, okay, that can give you an advanced signal that it's going to start back in an uptrend. Once again, or I can show you that this is probably going to hold. It was heading back up. It crossed over. Positive uptrend. Let's go look at Tesla, or let's go look at the SPY real quick with this MACD indicator. Like I said, MACD is one of my favorite indicators, and almost nobody trades it with the zero line. I don't know why, but they don't. Okay. Right here, we are sitting on the support. Okay. Was this going to hold? You look down here, RSI was still heading down, but your slow stow and your DMI were down low, so you're not really sure there, but this was trading below the zero line. Okay. And there was no clear sign that it does not look like it was going to upturn. To me, that was a very clear sign that this was going to fail. Okay. I told you guys last week that the MACD looked weak, or not, I'm sorry, that the MACD looked weak, but I told you guys last Thursday, I believe, that the market looked extended. Part of that was because this was I was looking at the MACD last week. I'm going to put back on the one-day breakout just so we can see how far back we're looking here. Okay. But look, it was struggling. We were hovering right at that zero line. It was looking weak, and sure enough, we tanked on Monday. Okay. Now, right here, we got a strong MACD zero lag crossing up. I mean, look at how strong that is. That showed, now, so like I said, this is zero lag. It crossed way before this did, but you could have had a strong indication right here when it was below that 50 EMA that it was going to go try and go back positive. Now the question is this going to stay above the zero line? Okay, everything bounces, guys. Does not mean that we are in a recovery here. It just means that I told you guys, when you break a support, you almost always go back and test for resistance. Okay, now if that resistance is going to hold, if it breaks through, it'll be tired. It'll come back down and test it for support again, and then take off if it's ready to take off. But that's how stocks work. Let's see, the balance is coming way. Yeah, so like I said, guys, there's a lot of things you can do to help you decide if you should stay in a play or not. It depends how much time you have, but how many times have you seen something? Okay, so let's say you took a call right here. Okay, which you shouldn't have done because you were doing a down cross. But let's say you took a call. Well, then it falls down. Oh shoot! Well, maybe it'll come back tomorrow. Okay, it didn't. But you could have saved yourself. Like I said, all we can do is educated guesses, guys. The market is irrational. It doesn't listen. It goes off of fear. Look, I talked about this morning a little bit, but look at some of these stocks, guys. Hell, COVID happened, and some of these businesses lost 90% of their revenue, right? And then news would come out that, oh, hey, we've got 30% of our revenue back. And stocks soared back to where they were pre-pandemic. It makes no sense. And then the market will talk about something that has nothing to do with, or news will come out, right? That has really nothing to do with the market. The market hates fear. The market is irrational. The market is rumor-driven. Just remember that. It doesn't matter if you know how good of a stock is. Tesla is probably not worth, let's go look at Tesla real quick. I don't think Tesla's worth $660. Tesla is priced at $660 because everybody thinks that Elon Musk can change the future. Okay. But if he can't, if something happens where Tesla doesn't change the future, this is not even a $300 stock. Tesla does not make a single dollar selling their cars. They make their money selling their tax credit or their carbon credits. Okay. It makes no sense that it blows my mind that they're not even profitable selling their cars. They're a car company that makes money selling EV credits, which means that all their profits come from government subsidies. Think about that. All right. Looking at this one again. Let's I erased this because I wanted you guys to see this, but so here you had a wedge forming. Okay. What a wedge is every time it gets to here, this is a previous support. If we zoom out, I'm sure it's look, you can see right here. So we go across, right? This is a previous known and tested support line. Shrink that down a little bit. There we go. But you can see right here, it tested it. It was a resistance. Here it was a support, resistance, right? But so this is a well-established previous support resistance line. Okay, now let's zoom into it again. All right. What happens here is the bulls buy it up, the bears kick in. Bears sell it down, bulls kick in, but they can't get it up as far. Bears kick in quicker and quicker. Now this was a breakout, but it was on the very first candle. Don't ever go off the very first opening candle of the day. It doesn't mean shit. The market did not agree. So in pre-market, this was probably up, whatever it was, but the market did not agree, and it pulled it right back down into the channel as soon as the market opened. So that was not real. Okay. But let's look at that zero line here. We were struggling right here. We saw that the bulls were losing. It should be no surprise that this dip happened. Okay. Then we crossed back up. Here we went positive, crossed back down, right? But here we are, we're crossing back up. So as long as this stays up, we should be looking good. You guys saw me took a PayPal play today. I'll show you why I took that, which we'll have to see if the market agrees or not. But post-market, it's back up to 299. Like I said, don't ever look at pre and post-market data. It doesn't really mean jack. I was playing this today. So here we crossed up. We held the 90 EMA, and I told you guys in my channel too, I'm looking for that 296 really to hold to keep in this play. That's because we broke through a resistance. I want to see it come back and possibly test for support. And I'd like to see this stay above the zero line. If this cannot stay above the zero line or hold this, I will bail on that call and I will post my exit. So is there anything else you guys want to see real quick? I am going to, to save this for your own chart, right? Go to tradingview.com, set up a chart or set up an account. I will post this right here. I'll also post it in our Discord. Okay, so I just posted there for you guys. What you'll do is you'll click on that link. Once you have an account, you'll go right here and you'll just hit save layout. And then the layout becomes your own. Okay. You can make changes to it. You can do it kind of however you want. You can click right here. You can turn on different things. You can turn back on the Heikin-Ashi candles, the linear regression. You can experiment with this chart. Okay. But yeah, that's my spiel, I suppose. I'm trying to think if I forgot anything else. Oh, I do have one thing. So I told you guys I do the 9, 20, 50, 100, and 200. If you want, and Google it, you can kind of read about it. But another strategy is to use the 5, 8, 13, 21. It also has the 50, the 100, and the 200. Okay. But the benefit of using, so white is 5, yellow is 8, orange is 13, and red is 21. The benefit of those is you can see a lot of shorts use the 5, 8, 13, and 21. The reason they use the 5, 8, 13, and 21 is because they can see bullish, so they react a little bit faster. So they can see a bullish movement happen maybe a day before the bulls see it, for people that use regular charts. I have it in there. It's more probably for advanced users. I just would recommend probably sticking to the 9 and 20. Like I said, guys, you look at these charts, and this is why I do this, but stocks heavily react with daily EMAs. They find support. If it can't hold the support, and look at that, it fell right down to the next EMA. Okay. Let's go look at Best Buy real quick. This is a blue chip stock. But here you can see we fell below the 200 EMA. Okay, it kept trying to come back. It couldn't. It needed to consolidate a little bit more. Finally, it broke through. Tried to get through. Could not hold, which you can tell right here. Right. Now here's a good example though. So right here, this led up, came down. I mean, don't go off of just this zero lag. It's not always right. So here's a sample where the zero lag was trading above, and eventually it did drag it above. But if you had taken it right here when this was above, this angle is not quite good enough to where I would have wanted to take this. Okay. Especially you could have told right here when it started to turn. And what I mean by turn is this blue turned around, right? You could tell that was not going to pass through that zero line at that point. It fell below that. It failed that 200 EMA, came down for a day, came back, retested, didn't hold. Like I said, guys, just go look at charts. Go play with these settings. I hope you guys enjoy them. If there's anything else I can do, please shoot me a DM. As far as what calls to play, guys, I just take that. So here, so let's go look at that real quick. So I took PayPal. My mentality for taking PayPal today. All right. We broke through the previous support right here. We broke through the 90 EMA. Came up, we passed the zero line. Like I said, I want to see this stay above the zero line to keep trending upward. But why did I take 315? Well, I wanted to be, I mean, first of all, I could have taken something closer to the money, but they were more expensive. I try and keep you guys in mind when I take calls. I mean, if we can get a rise back up to 307, which was the previous high as of, July 13th, just last week, that call will probably be up close to 100%, as long as it happens here in the near term. But that's what I'm looking for. We're not going to hold it for very long anyway. We're heading into earnings. I don't ever play things through earnings. We got a week for earnings yet. So we see and then we see. Just going back, like I said, you got to zoom out sometimes. Like I said, if you guys want to know what a chart's going to do for like the day, just for a day, this is not a, oh yeah, so here we go. So here's just the day, right? This went above the zero line right here. You could have very easily played a call on this, been out same day, as long as it hit above that zero line, and made some money, right? Let's look at another day. Let's look at this one. This was really not, honestly, not very clear here. But here you can see we down crossed the zero line. We could tell that this resistance was going to stay a resistance. You could have taken a put here. You could either gotten out the same day, made some, $2 drop for a weekly, that would have done well. Or you could have risked holding it overnight one night, and you would have done very well on that drop in the morning. Okay, that's the 5-minute chart. I really wouldn't trade the zero line much more than a day on the 5-minute chart. That's really if you just want to know what the stock's going to do that day. And I would look for the crossovers. Okay, if it's already above, here if you would have taken it right here, right, it kind of traded flat actually for the day. You could have taken a call right here, even though it was above the zero line, you wouldn't have made any money. By the next day, it down crossed, and you would have lost money. Okay, but if you look for the crossovers or a bounce, here you could have taken a call at the end of this day, looked like this was going to hold, made some money next morning. Here it down crossed, right? Towards the end of the day, that support was, and it's on this support, pretty evident that was not going to hold. Okay. You could have taken a put right before close, sold out at open or close to open, an hour in open, and you would have been very happy. If there's anything else I can do for you guys, please shoot me a DM. This will be saved in educational and in daily videos. My TradingView script will be changed. Will be saved there for you guys. Any questions, just shoot me a DM. Good luck to everybody, and we'll see you in the room.
Bitch, I got problems on problems on problems on problems on problems on problems. I solve them. I run through the money. The pressure be calling. Left on my blessings. I feel like I'm falling. The birdie is back. Tell me I'm garbage. I'm going through something.